Who's really foreclosing on homes, stripping people of the roofs over their heads, and pushing them into lives shackled by debt and endless labor? Who's behind the skyrocketing costs, the bubbles that burst, and then quietly swoop in to scoop up assets, stocks, real estate, entire companies, for pennies on the dollar? It's not your local government, it's not the elected officials whose names you know. It's the banking elite, less than 1% of the population, who operate behind the curtain of the state. They are the ones orchestrating the entire show, making the rich richer and everyone else more expendable. This isn't a conspiracy theory, it's an economic structure. These elites manufacture financial cycles, booms and busts, using monetary policies like interest rates and cash flow as their tools. But these tools aren't designed for economic prosperity. They're traps, bait for the masses. The real gains they extract aren't just dollars. They want your homes, your land, your time, your labor, your freedom. Most people never see the game. They're too busy surviving it. They don't know the rules, and they don't understand the financial machinery at play. So they become permanent players on someone else's board, working a lifetime just to repay debts they didn't fully comprehend. This is the essence of the modern pyramid. At the base, the working class. At the top, the architects of financial systems. Those at the bottom are caught in an endless grind, renting, repaying, refinancing. And above them, the ones who set the rates, inflate the markets, and own the mechanisms of control. And here's the catch. Money isn't the end goal. Never was. Money is just the tool. The real assets, land, property, labor, time, freedom. These are the currencies the elite truly value. Once you understand this, your worldview changes forever. You realize that behind every economic crisis, every sudden shift in financial policy, every black swan event, there is intent. And that intent almost always benefits the same invisible players. Welcome to Econo Hidden. Welcome to the truths society would rather you never know. Let's decode the financial game the elite have mastered. A process so calculated, so systematic, that it repeats itself across nations, decades, and even ideologies. It's what some call the Great Shearing, a predictable economic cycle designed not by nature, but by policy, for one purpose: asset transfer from the many to the few. It all starts with a simple principle. Your spending is someone else's income. The elite understand this at scale. Through central banks and private institutions, they initiate Phase 1, cheap money. Interest rates are slashed to historic lows. Suddenly, credit becomes irresistible. Businesses and individuals are encouraged, no, enticed, to borrow. They mortgage their homes, pledge their labor, and stake their future income in exchange for capital. The money floods the economy. People invest. Businesses expand. Markets boom. The media cheers a golden age of growth. This is the setup. Phase 2, the asset bubble. As borrowed money fuels demand, asset prices climb. Stocks, real estate, commodities. Everything appreciates. Even the collateral backing those original loans, houses, land, equity, now looks more valuable. More loans are issued against that inflated collateral. It's a self-reinforcing cycle of prosperity. Until it isn't. Enter Phase 3. Inflation and interest rate hikes. To tame the beast they created, the same central banks begin tightening. Interest rates rise. Loans become expensive. Those who borrowed at the bottom now struggle to repay at the top. Businesses begin cutting costs. People get laid off. Consumer spending drops. Then comes Phase 4. The bust. Defaults spread. Homeowners can't pay. Banks foreclose. Companies go bankrupt. Unemployment soars. And just like that, all those assets, your home, your land, your time, are returned to the banks at a discount. The same banks that inflated the bubble now own what was once yours. It's an elegant trap. And the most disturbing part? It never ends. As soon as the dust settles, interest rates drop again. Credit is loosened, and the cycle resets. Round and round it goes, an eternal carousel of debt, inflation, seizure, and restart. Only those who understand the cycle stand a chance of timing it. Everyone else is sheared, again and again. This is not random, this is engineered. What if the world's worst crises weren't accidents, but opportunities? What if economic crashes, pandemics, terrorist attacks, even wars served a financial purpose? The uncomfortable truth is this: every crisis is a business model, and the elite, they are its architects. Let's not mince words. The ultimate goals are always the same: control assets, seize power, and shift wealth upwards. And there are 5 words that explain nearly every major political and economic decision made in any country on earth: public debt, taxation, and inflation. These are not consequences of crisis. They are tools of conquest. Here's how the playbook works. Step 1. Inflate public debt. Governments, often under stress from emergencies or economic collapse, borrow massively. That debt is issued as bonds, bought largely by private banks and investment institutions. The people? They don't own the debt. They owe it. Step 2. Raise taxes. To cover mounting deficits, governments inevitably squeeze more out of the population. Income tax, VAT, capital gains, the list goes on. Every dollar taxed is a dollar redirected to servicing the debt that was created to save you. Step 3. Trigger inflation. With central banks printing money to inject liquidity into collapsing economies, the value of your currency erodes. Your savings shrink in real terms, but real assets, land, gold, commodities, go up. Guess who owns most of them? Step 4. Crash the markets. Once liquidity has saturated the system and inflation bites, central banks begin pulling the brakes. Rates rise, credit dries up, market valuations plummet. Fear sets in. This is the golden window. Step 5. Asset sweep. Stocks, homes, entire businesses are now underpriced, some near collapse. The elite, sitting on cash or hard assets, step in. They buy at rock-bottom prices. What cost you a fortune last year now goes for a fraction. But only if you have the capital. And they always do. Every so-called black swan event, from the 2008 housing crash to the COVID-19 pandemic, follows this blueprint. And those in control profit from both the descent and the rebound. So next time you see a crisis, ask, who benefits from this? Because the answer usually isn't the public. It's the few who understand the game, who make the rules and never stop playing. If you think the stock market is a level playing field, think again. It may look like a game of strategy and skill, but the rules are written by the house. And the house is always the bank. The modern stock market isn't just a place for companies to raise capital. It's a carefully engineered system where financial institutions control the flow of money, information, and, most importantly, outcomes. IPOs, margin loans, price manipulation, all of these are tools not just to profit but to dominate. Here's how it works. When a company borrows heavily from a bank, that bank gains leverage. If repayment becomes risky, the bank can pressure the company to go public, an IPO. This isn't about opportunity, it's about control. Going public forces a company to reveal its financials. It becomes easier to monitor, easier to squeeze. Banks often buy up large chunks of pre-IPO stock at a discount, what's called pre-market allocation. Once the IPO hits, the public pays full price, sometimes triple or more. The banks offload their positions, cash out, and move on, leaving retail investors holding the bag if prices drop. And if that company collapses, no problem. The bank already made money through underwriting fees, interest payments, and financial advisory services. Heads they win. Tails, you lose. Then there's margin trading. When times are good, banks encourage investors to borrow money to buy more stocks. They profit off the interest and drive up demand, inflating the market. But when volatility hits, those same banks pull the rug. They call in the loans, forcing mass sell-offs, crashing prices, and scooping up undervalued shares. It's profit at both ends. Want more evidence? Just look at how banks dominate every corner of the market infrastructure. From custody and settlement to analytics and ratings. They build the casino, loan you the chips, set the odds, and then bet against you. The result? The illusion of opportunity. But make no mistake, this is not investing. It's a rigged game. Retail investors, ordinary people, are the fish. And unless they know exactly what the sharks are doing, they'll always be prey. You don't beat this system by playing harder. You beat it by understanding who owns the table. They look like geniuses. They're on the covers of business magazines, giving TED Talks, headlining startup summits. Overnight billionaires riding the wave of the future. AI, renewable energy, blockchain, biotech. But behind the sleek decks and inspirational branding lies a darker truth. Many of these billionaires are just airbrushed con men in tailored suits. Here's how the scam works. Step 1. Borrow and build the illusion. These players secure funding from banks or venture capital funds, massive amounts of it. With that money, they set up shell companies built more on pitch decks than products. They don't need a working model. All they need is a story compelling enough to sell. Revolutionizing energy, democratizing finance, AI for humanity. You've heard it. Step 2. Generate media hype. They hire PR firms, influencers, friendly journalists. They flood LinkedIn, YouTube, and finance podcasts with visions of disruption and limitless growth. Conferences are staged, early investor events held, and suddenly the public perception is that something huge is about to take off. Step 3. Go public. They list the company on the stock exchange, often at inflated valuations wildly detached from any real cash flow or profitability. Shares skyrocket. Retail investors pile in. On paper, these founders become billionaires. They're rich. In screen pixels. Step 4. Exit before the pop. Once the stock price peaks, these insiders begin selling, quietly. They cash out, converting paper wealth into real dollars. Meanwhile, the company stalls. Products fail. Revenue never materializes. Step 5. The crash. Shareholders are left with worthless stock. Lawsuits pile up. Some founders disappear. Others end up behind bars, scapegoats of a system that not only enabled the scam, but incentivized it. This isn't an isolated story. It's a repeatable model. The same cycle has played out with fake AI startups, overhyped crypto coins, and even real estate ventures. The narrative doesn't matter. The mechanics stay the same. These schemes don't just trick investors. They undermine trust in the entire economic system. But here's the most telling part. While a few of these charlatans do get caught, the ecosystem that created them, banks, VCs, financial media, walks away clean, often with their pockets full. So, next time someone claims to be a self-made billionaire, ask yourself, did they build value, or just inflate it? Real estate, safe haven, golden investment, the dream of every middle-class family. But ask yourself, why do home prices keep climbing, decade after decade, far outpacing wage growth and population needs? Is it really just supply and demand? Or is something more manipulated at play? Let's be blunt. Real estate isn't just about shelter. It's about power, leverage, and control. It's a game played by developers, banks, and policymakers, while ordinary people are fed the illusion of upward mobility. Look at the data. In many cities, home prices have increased tenfold over the last 20 years. Take Vietnam, for example. A house worth 500 million VND back then might cost 5 billion now. But wages? Nowhere near that growth. So how can this be? Simple. Because real estate is where the elites store inflation. When central banks print money, they inject liquidity into the economy. But this new money doesn't go evenly into everyone's wallet. It flows through credit, through investment funds, through speculation, straight into assets, land, buildings, stocks, and real estate is the biggest sponge of them all. Developers, sitting on land banks for years, suddenly release projects when credit is loose. Prices surge. Banks offer favorable mortgage terms, encouraging mass participation. The media cheers a housing boom. But what's really booming is household debt. The problem? Real estate has become a laundering mechanism, not just for inflation but for black money. Corrupt funds. Political capital. That's why ghost cities exist in China. Why half-finished condos dot urban skylines. They weren't built for people. They were built for money. And banks? They're not passive observers. They pump money into property markets, tighten credit at peaks, and seize assets when people default. Developers play along, driving artificial scarcity through policy lobbying, delaying approvals, or hoarding land. Meanwhile, the last buyer, the regular person, enters at the peak, takes out a huge loan, and ends up repaying it for 30 years. Welcome to the real estate trap. And here's the kicker. Even when there's oversupply, prices rarely drop, because the system can't allow it. Real estate is too tied to national financial stability. If housing prices crash, so do bank balance sheets, pension funds, and government bonds. So, the illusion must be maintained. Property becomes less about homes and more about financial scaffolding. A shiny, concrete illusion that traps your wealth and your future. Let's talk about the game that most people don't even realize they're playing and losing. It's the silent battle between your wages and inflation. A game where you, the worker, are set up to lose from the start, no matter how hard you grind. It starts with a cruel comparison. 2 decades ago, in Vietnam, A typical house cost around 200 million VND. Back then, a monthly salary of 2 million VND meant you could realistically save up and buy a home in 10 years. Fast forward to today. That same house is priced at 20 billion. Salaries? Maybe 15 million if you're lucky. Now do the math. Saving for a home would take over 100 years. This isn't just about Vietnam. This is happening globally. It's a feature of the system, not a bug. Because here's the harsh truth. If your income comes solely from wages, you are not playing the same game as those whose wealth is stored in assets. Inflation doesn't hit everyone equally. When prices rise 30% but your salary goes up only 5%, you're effectively getting poorer, even if your paycheck is technically growing. Meanwhile, those who own land, gold, or stocks see their wealth rise with inflation. Their assets gain value simply by existing. The system is rigged in favor of asset holders. If you don't own appreciating assets, if all you have is a bank account and a job, you're just running faster on a treadmill that keeps tilting against you. And it's not by accident. The economy is designed to funnel wealth upward. As money loses value, the cost of essentials, food, housing, healthcare, skyrockets. But your income? It lags. And the higher the prices go, the further behind you fall. To make things worse, when you finally save enough for a down payment, prices have already jumped again. It's like chasing a mirage. You work, you save, and you still fall short. Meanwhile, those with capital just sit back and watch their net worth rise. This is why inequality grows, because the returns on capital outpace the returns on labor. Every single time. The real game isn't about working harder. It's about owning assets that beat inflation. Because without that, you're stuck in a race where the finish line keeps moving, and the rules are never in your favor. If you've ever wondered why financial crises seem to come in waves, why markets boom, bust, and boom again, it's not just the natural rhythm of capitalism, it's choreography. Carefully executed by central banks and state institutions with precision tools and predictable phases. There are 4 stages in this recurring script: recovery, growth, recession, and crisis. And each is engineered to manage the flow of capital, not for the public's benefit, but to preserve the system and serve those who control it. Stage 1, recovery. Setting the stage. Right after a downturn, the narrative is carefully crafted. The economy is still weak, the media says. Recovery is fragile. But behind the scenes, central banks are already injecting liquidity. Interest rates on savings are kept high just long enough to attract deposits, while lending is quietly prepared. This builds up capital reserves inside the banking system. The goal isn't to rescue the economy, it's to reload the cannon for the next cycle. Stage 2, growth, the big push. Once enough cash is stashed in banks, the floodgates open. Lending standards are eased. Interest rates on loans drop. The media shifts gears. The economy is booming, don't miss out. Stocks rise, real estate surges. Everyone from investors to retirees to vegetable vendors is jumping into markets. It's a frenzy, and it's intentional. The goal? Suck capital out of the banking system and into speculative assets. Stage 3, recession, the slow squeeze. Liquidity starts to dry up. Central banks inch up rates. Credit becomes harder to get, but no one wants to say it out loud. The media still reassures you. This is a soft landing. But it's not. Real estate deals stall. Stocks lose steam. Gold ticks upward. And slowly, fear creeps in. Banks pull back. Businesses begin to fail. But it's still not called a crisis. Not yet. Stage 4. Crisis. The purge. This is where the system purges itself. Interest rates are raised sharply. Capital controls are deployed. The flow of money is locked down into the system and out of the country. Markets collapse. Investors panic. Property gets dumped, but there are no buyers. Gold soars. Bank savings spike as people flee to safety. The state talks about stabilization, but what it's really doing is resetting the table. Once the dust settles, the playbook starts again. And unless you understand the signals, you'll always be late to the game. Buying when you should be selling, holding when you should be exiting. This isn't a cycle, it's a carousel. You're not riding it, you're strapped to it, unless you learn how to see the turn before it comes. So now you know the truth. The financial system we live in isn't built to make you wealthy. It's built to use your time, your labor, your savings, to enrich someone else. And unless you understand the cycle, you will always be trapped inside it. It doesn't matter whether you're investing in stocks, real estate, crypto, gold, or just saving for retirement, every asset class follows the cycle. There's always a phase of accumulation, a period of hype, a peak, a crash, and then a quiet reset. Those who profit most are not the ones who hustle the hardest, but the ones who time it right. That's why knowledge, not money, is your first form of capital. Look around. Governments, banks, billionaires, they all follow the same rhythms. They accumulate quietly when things are cold, and they sell when the crowd gets hot. They tighten when fear peaks, and they relax when greed returns. It's never personal, it's a system, and most people are playing against it without even knowing the rules. If you're just working harder, saving more, hoping things will get better, then you're not investing. You're surviving. But survival isn't enough anymore. Not in a game that resets every 5 to 10 years, with devastating effects on anyone unprepared. The solution isn't to rage against the system, it's to understand it deeply. Learn the signs of each phase, watch how the media shifts its tone, follow the interest rates, track the flow of money. When the market is euphoric, be cautious. When it's dead quiet, start learning and buying. Because if you don't time the economy will time you. And you won't like when it rings the bell. Understanding economic cycles is no longer a luxury. It's a survival skill. And if you've made it this far into this video, then you already know. You're not meant to be a pawn. You're meant to be a player. So, comment below. Tell us where you think we are in the cycle today. And if this episode hit home, like, share, and subscribe. There's more coming. And trust me, you won't want to miss what's next.